Welcome back. Well, we've slipped yet again from those highs. We mentioned earlier today that congestion zone is at around that 17,850. We're making attempts to go there, but it seems at least as of now, the bulls, they're lacking the firepower to get past that mark. But let's talk about stocks on the broader markets. Anupam Rasayan, well, that stock trades in the green on the back of a pretty good set of numbers in the past quarter. Sonal joins us to run us through the fine print. Sonal?
Thank you for that. Well, yes, good set of numbers coming in from Anupam Rasayan. Revenue growth of 25%, leading to an EBITDA growth of 45%. There has been a margin expansion of 400 basis points. This has led to a profit growth of 15%. This is about the P&L. Even in their balance sheet, they have seen some improvement. Inventory days, they have declined on a YoY basis in the first half to 266 days. Working capital was an issue for the company, and they have been working on that. The company says that they continue to see upward bias in all the contracted volumes for their major clients. They are also seeing benefits of the Europe Plus One trend that we have been talking about. So that is some positive comment. The QIP proceeds, which was recently committed, they said they'll be using it for a letter of intent and fluorination pipeline as well. So on their fluorination pipeline and the new projects, they will be spending around 450 crore rupees, where they see a revenue potential of 1100 crore rupees. They did have a fire incident recently, the impact of which will be around 30 to 40 crore rupees in the third quarter. However, positive commentary and good numbers is keeping the stock higher. Jefferies on the back of this has increased the target price to 1,030 versus 1,000 earlier.
All right, we take that point. Thanks a lot for that, Sonal. With that, let's talk about the pharmaceutical space. Dr. Reddy's will be reporting its quarterly numbers today. Ekta joins in with the key expectations. Ekta.
Thanks for that. Well, yes, for Dr. Reddy's, on a year-on-year basis, it's expected to be largely a flat performance in terms of revenue. And that is because Q1 FY22 had a couple of one-offs. They did have some licensing income that they did benefit from. And besides that, there was a COVID amount of impact in the revenue same time last year as well. Now, margins are probably going to come off on a year-on-year basis, again, for similar reasons because of a high base. And the profit is expected at around 787 odd crores. But there would be some amount of an uptake when it comes to revenue on a Q-on-Q basis. Now, a couple of important things to watch out for would be the US sales. Now, you have to look at how the performance of Dr. Reddy's would be on a standalone basis this quarter. That's simply because they do have the benefit of Revlimid generic, which would probably come through this quarter. They do have exclusivity in 2 strengths when it comes to this particular cancer drug, and hence that could benefit in terms of the US sales. For India overall, it is estimated to grow around 7 to 8% on a Q-on-Q basis. Now, year on year, there will be a COVID impact, but Q-on-Q, there could be a growth of around 7 to 8%, which is what the street is anticipating. Russia CIS will also be in focus on account of what they report there. They have mentioned in the past that it is a market which they would focus on, but the political uncertainty could probably result in some amount of volatility when it comes to the overall numbers. In terms of guidance, they had guided that they would maintain their mid-term guidance of single-digit US business growth, double-digit growth for the non-US business, 25% EBITDA margins as well. So that's something that the street would probably look out for in terms of trends and a larger scale perspective from the company.
Okay, all right, Ekta, thanks for that. Well,